Between January of 1720 and March of 1721, the price of the Mississippi Company fell by 99.5%, and the French economy was decimated. At its peak, in today's terms, the company was worth $6.5 trillion. This is bigger than Apple and Microsoft combined. At the time of recording, Apple and Microsoft are the two largest companies in the world. The Mississippi Company was an absolute juggernaut. It had a 25-year contract with the government of France that granted it a monopoly on all trade between France and its American territory. This territory included what was referred to as Louisiana and much of Canada. Louisiana included the modern-day American states of Louisiana, Arkansas, Mississippi, Missouri, Illinois, and Indiana, among others. Over time, it acquired the companies that had the other major trade monopolies as well. It came to have a monopoly on all trade between France and China, between France and the East Indies, and on the trade of tobacco between France and Africa. Essentially, it controlled all trade between France and the rest of the world. But it didn't stop with trade monopolies. It also gobbled up the companies that the government sanctioned for tax collection. At its peak, it was collecting 90% of all of the taxes from France and its colonies. The Mississippi Company would collect the taxes, pay the government a cut, then keep the rest. And last but certainly not least, the company came to have its own bank, which, again, had a government-granted monopoly. It was the only bank in France with the power to create paper money. To modern ears, it almost defies belief that a company could do many of these things. But if you think about it, it was basically the government contracting model of today, only on steroids. Today, a private company can win a contract with the government to build an airport, design a new fighter jet, or to manufacture a spacesuit. In 1700s France, they could effectively win a contract to collect taxes on behalf of the government, to conduct trade between France and China, or to manage the money supply. The company began with the trade monopoly between France and the French territory of Louisiana. It focused its operations on the mouth of the Mississippi, hence the name. But it rapidly expanded beyond this, primarily by buying out other companies. To fund these purchases, the company sold stock to the public. Given the company's rapid growth and almost comically strong business model, public buyers were easy to find. From the beginning of 1719 to the end, the price of the shares increased by 1,900%, from 500 units to 9,525 units per share. This rapid growth inspired a speculative frenzy. Paris's financial district was so active with participants from all over Europe that police were regularly brought in to maintain order. At this time, it was common for working-class people to throw their life savings into Mississippi Company stock. Until around August of 1719, although the company was almost certainly overvalued, there wasn't much evidence suggesting that it would soon go catastrophically bust. It was an incredibly strong business. It could support high valuations and speculative prices, but that would change when a radical service was introduced at the company bank. The company decided that the bank would buy shares from anyone who wanted to sell them. To support the price of the stock, the bank would regularly pay above the market price. It's worth remembering that the bank wasn't buying these shares with its own money. It was printing new paper money for the entire country of France to purchase the shares. Since the bank was part of the company was effectively, on demand, printing new paper money for the country to buy back its own shares. Owners of the stock began to realize that they could get more money by selling their shares to the bank, so they did. But every time someone sold to the bank, the supply of paper currency increased. This devalued the paper currency and caused inflation. By the end of 1720, the paper money had lost over half of its value. In January of 1720 alone, the monthly rate of inflation hit 23%, an annualized rate of 1,100%. With the currency rapidly losing its purchasing power, people began rushing to the bank to redeem their paper for gold and silver. At the time, the paper currency was officially backed by gold and silver. As a holder of paper currency, you had the right to redeem your paper for physical gold or silver at any time at the bank. But the bank had created many times more notes than it had gold or silver in reserve. As the public came to realize that the bank could not make due on its promise, panic set in and everyone began dumping the stock and redeeming as much gold and silver as they could until the bank's reserves were empty. In the end, the Mississippi Company goes bankrupt, trading at a price of 50 units in March of 1721, a decline in price of 99.5%. The French government takes control of the business, the former leader of the company is exiled, taxes are raised to exorbitant levels, and the French economy remained in shambles for years to come.